Worldwide markets this week. Tariffs are here. Where to position your portfolio? Budget passed, but does the GNU survive? Rand is stressing recession. Where to invest there? This is Worldwide Markets, episode 629 for 9 April, recorded just ahead of the market open. And I, of course, am Simon Brown. Worldwide Markets, powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest forex rates. Now also with JC shares, thanks to Shift and Standard Bank. So let's start local because, well, we got a budget passed, well, a budget framework passed last Wednesday evening. It was close. Fun fact, if all the MK MPs had been in Parliament and voted against the budget, I don't think it passed. Anyway, it did. The VAT increase goes into effect on 1 May, 0.5%. A lot of folks are saying, nope, it's not going to happen. We will see. I don't. It looks certain to. The big question is the GNU going to survive? The ANC, the National Working Committee, they run the ANC effectively between conferences. They had a meeting on Monday. They've essentially said, let's go back to all our GNU partners and the others, and let's reformulate this agreement. And I think that makes sense, right? The agreement perhaps does need a little bit of work. But our Rand is stressing. It was up at almost, 1990 almost earlier this morning. It's now 1870 and some change. Definitely improving, but to be clear, it is, it's breaking levels that you didn't want it to. Sort of what is those sort of levels? 1930s, etc. Those are important levels. I don't think we haven't hit the worst yet. The worst level was back in June of last year, as we were trying to decide if we could or couldn't get a government of national unity. I think the Rand stress is in part, it is what is happening to the GNU, and I think also it is just the global fears, and we'll talk a bunch about that in a moment. The dollar index has been weakening. It's down at 102.25, not quite the lows. It was sub 102 last week, but we are seeing worries around the GNU, worries around our Rand, and that at this point in time is not going away. And under normal circumstances, that would be a big story. That would perhaps be the story. Of course, it's not. I recorded last week's show on Tuesday, and we knew that Liberation Day was coming. I at the time said, look, I think we'll get a bounce in the S&P 500, but expect ultimately another 5 or 10%. I think I said 10% down. We've probably clocked that already. We're probably well within that. We've been seeing some very, very messy markets in the US and globally, to be clear. And I'm recording this later than I normally would. I would normally record on a Tuesday. I wanted to get a sense of where were we going to, what was going to happen. We had a really, really strong day on Tuesday after the horror of Wednesday. And I thought, let's see where we go. Well, we are down. Let's add the drawdowns into this. That's the template I want. There we go. S&P 500 is now down 18.25%. So, yeah, we've pretty much got that 10 that I promised. And the Nasdaq, which is QQQ, let's go to drawdown there too. Nasdaq is down 22.5. This all sounds very, very horrid, but here's a fun fact. Charlie Bello, always worth a follow on the Twitters, and what he's saying is that after this is our, and sorry, I need to be able to read that tweet. Down 12% in 4 trading days, the 12th biggest 4-day decline since 1950. Post this, markets were higher over 1, 3, and 5 years every single time. I'm seeing a lot of data like this, which is basically saying, you know what, after this type of event, i.e. the sell-off, markets have been higher. I spoke to Chantal Marks on my MoneyWeb Now podcast this morning, and she reminded us that, after every single collapse, markets have recovered. Absolutely, they have. So the first rule, and Chantal said it quite eloquently, don't panic. There's no upside to panicking. The question is it different this time? And I My gut always says, no, it's not different. But certainly there are nuances. So we got the Freedom Liberation Day from President Trump last Wednesday. They did it after market close, well, the US market close, and markets have responded accordingly. The tariffs are, they were thinking that tariffs might come in 5 or 10% maybe, that they would be reciprocal. For example, the average tariff South Africa is putting on US goods is about a little under 8%, so maybe we get 8%. Trump has also said, but hang on a second, VAT is a tariff. Sure. Whatever. That would be 23. Instead, they made this number that said we were 60%, and therefore, after our discount, we would be at 30%. We know the story. I'm not going to rehash all of that. Couple of important points. This is not the pandemic crisis. That was a health crisis, and the world was working at high speed to A, help the populace, and B, to find vaccines for the virus. This is not 2008, which was a really bad home loan environment in the US, horrid, ninja loans, no income, no job type loans. And again, when it happened, the US Congress and the world worked flat out to try and resolve it. This is not the dot-com bust. The dot-com bust really was insane valuations that needed to work their way out of the system. This is completely, we've got some elements here, and some of those elements are that we had some crazy valuations in Mag 7 and the like, but this is completely and absolutely self-inflicted, and no one's working to fix it. That is the big difference. Trump and his team aren't out there frantically trying to find ways to solve this problem. So what this really is more about is trying to change the global economic order. We now have tariffs out of the US that are higher than they've been in over 100 years. They're worse than the Smoot-Hawley tariffs of 100 years ago. So this is going to be painful. And the question is, does Trump walk it back? Because that's the easy way out of this. And by all accounts, the answer to that is nope, he's not going to be walking it back. He wants to sort of change the global order, get the revenue, and onshore manufacturing into the US. So let's touch on that revenue for a moment. These tariffs are absolutely going to make some money for the US Treasury, as they tariff the goods coming in. 104% on Chinese goods went into effect midnight. That's revenue for the US government. Make no mistake about it. It will be declining revenue because, quite frankly, there will be less orders. There's just going to be less stuff coming from China now that it's going to basically cost double the price it did 2 weeks ago, 10 days ago. So there will be less orders. The idea then that companies will onshore into the US, and that's weird because then you're not going to get the money because now they're going to onshore, so there's no tariff. But park that disconnect aside. How much are they going to make from this? 600 billion was a number I saw. Let's be generous and say it's $1 trillion. The debt story is $30+ trillion. So it doesn't really help there. Are we going to see onshoring happening? And the answer is no. There will be a little bit at the edges. For example, let's take Vietnam, which I think got slapped with a 50-odd% tariff. So Nike makes their shoes in Vietnam, in factories where workers are getting paid, $100, $150 a week. They're working 18-hour shifts. Are there people in America who want those jobs in a 4.2% unemployment? No. Yes, immigrants. Problem. Closing borders. They just disconnect everywhere. It's just, it's absolutely messy. What about some automation? Sure, maybe we could automate. They talked yesterday about how, no, you won't be, screwing screws into your iPhone in an American factory. What you'll have is automation, and the American workers will be overseeing the automation, and these will be really lacquer blue-collar jobs paying well, etc. Again, maybe. The bigger issue is that if you are Tim Cook, let's stay with Apple for a moment, and you're saying, well, hang on a second. Firstly, Trump's gone in under 4 years. Is Trump going to see through with this? Secondly, it's going to take me years to build this very high-tech factory and the automation and to upskill everyone. This is not going to happen in weeks and months. This is going to take years. What happens in 2020? When's the next US election? 28, and the new president will come in 29. Will it be Will it be Trump again? I mean, he says yes, but of course the Constitution says no. Will it be more of a more hardcore Republican, a less hardcore? Will it be a Democrat? In other words, uncertainty. And that's what I've been talking around from a geopolitical point around the trade wars and NATO and Ukraine, where Trump has blown up multi-decade relationships, friendships that America had with the rest of the world. And that creates uncertainty. Suddenly Canada's like, yeah, maybe we're on our own. Ditto with Europe. It means that we're getting new alliances being formed. And America's been carved out of them. And does Tim Cook go and make these very much more expensive iPhones in the US, or does he try and wait it out and hope that at some point Trump walks this back? I don't know how he can walk it back. So short answer is stuff is going to get more expensive in the US, a lot more expensive. And it's going to hurt everyone else as well, right? There are going to be less iPhones being made. There are going to be less Nike sneakers sold in America, which means people in Vietnam and China and stuff who are producing these goods are going to have to produce less goods. So there's going to be less staff being employed, less wages being paid. And that is going to have problems for the global economy. Are we heading for a global recession? I'm seeing reports that the big banks in America are saying the odds of that is now 55%. I would think maybe it's actually going to be more than that. So we will see. I mean, there are other ways of, for example, Apple also makes iPhones in India. So could they send Indian iPhones to the US rather than sending Chinese iPhones? There's still a tariff, but it's a lower tariff. So all of this is sort of starting to happen. The Switch 2, which is a gaming console from Nintendo, was supposed to start pre-orders today in the US. I think it was going to be $499.99, so call it $450. They said, look, the rest of the world can start pre-orders. We can't do that where we in America because we don't know what the tariff story is going to be. We simply don't know how much we are going to have to charge. So there is just too much moving parts. Trump also, he said yesterday that Europe must buy 350 billion of US energy and then tariffs can go. But then Vietnam approaches him and he says, no, but there's other challenges there. And what he's talking about there, the one is VAT. I mean, is VAT a tariff essentially being put onto imported American goods? Yeah, I mean, sure, you can view it like that. He wants, the trade balances to be evened out. That can't happen. Vietnam is a poor country. The Vietnamese can't afford the American products and services that are being made. They make low, high quality, but easy to manufacture in a sense. $200 a week earnings in Vietnam. They're never going to get that trade balance to zero. It's just not going to happen. So Trump is also saying things like, for example, he's saying there's other non-monetary barriers. And an example there is, we were struggling to sell as a country citrus into the EU. I don't know if we still are or aren't, because of black spot. So there's, health and those sort of barriers that get put in the way as well. And he wants all of those gone. This is messy. And we're being polite here because this is not a swearing podcast. This is very, very messy. And it's best illustrated by one of the craziest things I have seen in a long time, and that was the US 10-year this morning. So I hit my desk about 5:15 every morning, having a look-see, and the US 10-year is not even on my watch list because it's just... It doesn't move. It's just so incredibly boring. But this morning, my Twitter was full of it's collapsing. Now, one of the stories last week was that Trump is clever. There's some, I think, $7 or $8 or $9 trillion of US debt that's has to be rolled over in the months and year ahead. And you don't want to do that at 4.5% because that's going to cost a bomb. You want to do it at 3.5 or 2.5. And initially the 10-year was, the yield was coming down. Remember, if the yield is down, price is up. That means people were in there and buying. And then what started to happen was it started to weaken. And this morning, literally every time I checked, it would be another 0.1% higher, which in a treasury market and in particularly the US 10-year is we saw it in the 30-year gilts with Liz Truss's, the UK gilts, Liz Truss budget, but even that wasn't moving quite that fast. It got above 4.5 this morning. It's back to 4.2 0.425, so a much better rate. And you'll note the whole time I've been talking, it hasn't moved. Question: who is trading US 10 years at what effectively was the middle of the night in the US? And there are a few options here. Now, a lot of talk around well, you know what it is. There are some hedge funds, etc., that need quick liquidity, so they're rushing to the US 10-year because that's nice and liquid. Absolutely. We can see that in gold. Gold has not rallied hard because people are selling it because they want some cash. But here's another theory. So midnight in America is trading hours in Asia, right? Who are the biggest holders of US debt? I got this from Skulklow on Twitter. Biggest holders: Japan at $1 trillion, China at $759 billion. The Trump tariffs went into effect at midnight. At midnight, we started to see quite aggressive selling of US treasuries. Is this China saying, hey, two can play this game? I remember a crazy chap on the Page 88 forum 20 years ago saying that the World War III would be fought in the markets. And is this China saying, ha ha, hold my beer? At this point, it absolutely looks like it. So what do we do? Are we going to have a recession or not? I don't know. But what I do know is that if these tariffs stay in, we are in for a bumpy ride. How long that bumpy ride, I don't know. It could be months, could be years, could be even longer. What do we want? We want quality. We want defensive stocks. Chatting with Chantal Marks this morning, she's like, you know what, there's some great European and South African stocks at really, really good prices. And here, for example, I mean, Capitec was below 2,500 briefly on Monday morning. I think it's now back at 2,800. But there are great stocks. She reminds us of Ferrari. Otherwise known as Race. So, you know, more options there. Although I want to quickly swing to our local futures. 8:30 they opened. It's now, as I'm recording, 18 minutes to 9. Our futures are actually only down 1,700 points, 2.2% lower. That was 3,000 points and 4% lower, 6:30 this morning. So it is improving in that regard. But back to what we're buying. So, you know, ASML, I really liked it at 712. Now it's 595. Capitec, you know, it's sub 2.5 if it gets back there. She mentioned a couple. You can go find that on the MoneyWeb website. Health stocks. I spoke about Johnson & Johnson last week. Now, quick, go down that route. A couple of folks said, look, you spoke about Johnson & Johnson, but you didn't mention the risks such as the talc powder lawsuit. Those are one of the issues that they are going to have from time to time. We wish they didn't, but they do. They can afford it. They got $24 billion in cash and cash equivalents, so they can certainly afford what might be a chunky. They got a judge that rejected one of their pleas last week to try and put the company that they've put the issue into Chapter 1 bankruptcy. There's the Satrix Global Breakthrough Health Index, STX HLT. There's healthcare. Why healthcare? Because, yes, there'll be less elective surgery, but there's still going to be health issues going on. What about the tobacco and the boozers, the British American, the Philip Morris, the Anheuser-Busch, which you can buy in many cases locally and offshore? Am I smoking less because of this? Well, I'm probably smoking more. Booze, you've got some flexibility there, but I can see the attraction of it. Grocers, I mean, we have to eat, right? We absolutely have to eat. So, you know, ShopRite, again, it was down in the 250s. We're looking for great stocks, defensive stocks that are suddenly offering us really, really good prices. What about Bidcorp as an example? I was chatting with Meryl Pick from Old Mutual Investment Group on the show yesterday, Tuesday. And Bidcorp doesn't operate much in America at all. Yes, they are a global food logistics company, but the logistics, the moving of the food products is mostly internal, because think about it. I mean, you're moving lettuce. You're not shipping that across the world. You might be moving it a couple of hundred Ks, but not that sort of far, not that far. Gold, yeah, like gold. Gold is selling off, and the reason why gold is selling off is the usual simple reason. Right at this point in time, what we've got is markets are scary. So what people want all of a sudden is they're like, I need some cash. And where do you get that cash from? Well, you go and sell yourself some liquid assets. US 10 years would certainly be there, and gold would also be there at the same time. So gold has pulled back. It's bounced a little bit more. Last week's candle looks a little bit bearish, but I mean, we could see gold back at 2,800, in which case I am very keen for that. Let's see how gold plays out, but that's one on the list. Key thing, I'm not rushing. I think we've got some time. Here. What about just bonds? But you want bonds in the primary market, so the RSA retail bonds. The rates didn't change for April, but I think we're going to get better rates in May as things are running right now. Our local government bond rates are going up. So something like that, which can give you, 9.5%, 10.5% locked in for 5 years. Nice. Defense stocks. Now, there are moral issues around that for some people. Fair enough. I'm going to be doing, there's a global, a European defense stock ETF. We'll be writing a review on that. It'll be on the website on Thursday morning. China, yeah, but 104% tariff on China is going to hurt. Japan, yeah, actually, Japan. Europe, I mean, generally Europe, yes. I mean, the European ETF, which I've written about, justonelab.com/ETFs, you'll find it there. It has a whole lot of oil in it, but it also has a whole lot of there's some tech, not a lot of tech because, I mean, I think it's SAP, it's, but that sort of thing. That's what I'm looking for. Emerging markets, I think they're going to get really hurt. No one escapes pain here. It's around levels of pain. And I think the likes of Europe can manage it better. They can chat to the UK, which of course no longer part of Europe. They can go and chat to other trade partners such as us. Where there are no tariffs, they can go and chat to China. So I think there is opportunity out there. I am not rushing, but I am drawing up a list of quality. I expect markets to remain ugly for a while. Absolutely, I do. And I think another important point is I don't think this is going to go away in a hurry unless Trump capitulates. And at this point, I simply don't see how he can. I think we are too far down that road. Worldwide markets powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. Quick check on our futures. Where are we now? It's now 13 minutes to 9. Futures are weaker, 2.5% down, 1,950 points. It's going to be an ugly day today. The key point is don't panic. And remember, Monday was an ugly day. So ugly days are, and Friday wasn't. Ugly's just the new market right now. This is, as I say, not going away in a hurry, but panic is not going to help. Let's leave it there. We'll be back again next week. My name is Simon. Appreciate your listening. I appreciate a review. This podcast is, 600 odd episodes old. People forget about us. If you're loving the show, if you're listening this long into it, you must be. Please leave us a great review on your podcatcher of choice. We'll try to go next week. Until then, look after yourself. If you can, look after somebody else as well.